Hi guys, it's Sterling Spectre here, welcome back to the Mining Show. Today we've got 3 articles to cover, the first one being the Bitmain ships Ethereum miner equivalent to 25 RTX 3080 GPUs. So this is the new E9 for Ethereum. Obviously it's come at a worse time to be actually launching this product. It says here Bitmain launched its long-awaited Antminer E9 system today. The firm claims that one Antminer E9 system has the crypto computing power to match 25 NVIDIA GeForce RTX 3080 graphics cards. This is an achievement which Bitmain measures in Ethereum mining performance terms. In brief, the Antminer E9 is capable of 2400 megahash on the Ethereum hashing algorithm, while eating up to 1920 watts of power. Since its first tease, the Antminer E9, the specs appear to have changed somewhat, with no real explanation from Bitmain. Last April, Bitmain teased that it was about to launch a specialized Ethereum miner capable of 3000 megahash, using 2500 watts of power. At the time, it boasted that it could mine 32 RTX 3080 graphics cards worth of Ethereum. Today, the finishing shipping product is said to offer a mining performance equivalent to 25 RTX 3080s. However, it seems a little more efficient. So Bitmain might have changed the Antminer E9 specs for pricing, efficiency, or another reason, but the company didn't provide any explanations. Bitmain's Twitter account says that the Antminer E9 should be available today. We checked the site just a couple of hours ago after the toted hardware sale started, but it wasn't available. It may appear on the Bitmain retail site later, however it isn't showing when the checkbox shows the sold out products. So there shows a picture of the Antminer E9, the time has come, 1200 megahash, 1900 watts, and an efficiency of 0.8 joules per minute, I guess, or joules per megahash. Right here it says that it can mine on both ETH and ETH Classic, as it says on the ETH hash algorithm right here. The Antminer E9 has been through a prolonged gestation period since its teaser regarding the Ethereum targeting system in April of 2021. At the time, Bitmain said it would launch very soon, but the company seemingly encountered problems releasing the ASIC miner. Bitmain didn't share any pricing for the Antminer E9 either. The cryptocurrencies aren't such as an attractive investment as they were at the pre-war, pre-double-digit inflation, pre-recession spring of 2021. As well as the crypto crash, which has paused chiefly since the mid-June, there is another significant negative to the prospect of investing in a specialized ETH miner today. The oft-delayed merge, where the ETH mining ends due to the transition of proof of stake, is firmly penciled in for August of this year. Sadly, there have been multiple setbacks, so that could suffer another delay again. So obviously, Antminer or Bitmain aren't really releasing this at the greatest time due to the Ethereum merge coming up in about... They said that it's August, but I think it's going to be pushed back to September, maybe October. But it always gets pushed back and we can't really put a date on this. As I said, it's firmly penciled for August, but we don't really know if it's actually going to be coming through at that time. But, you know, it's got good efficiency. I think that they're releasing this because they want to obviously make sales, but they're not going to make as many sales as they would think. But they're just trying to get, you know, money in to focus on maybe producing new Bitcoin ASICs or other ASICs that they're working on. If you want my opinion, I wouldn't be buying any ASIC miners for Ethereum right now. They're just pretty much useless. In terms of, you know, we've got about 3 months, they're not going to ROI. I'm not sure what the prices for the E9 are, but I can assure that they're up there in the thousands and will definitely not ROI in any amount of time before the Ethereum merge happens. Obviously it can mine on Ethereum Classic, so if you're looking to mine Ethereum Classic, then maybe look into buying one of these, see what the efficiency actually is on the Ethereum Classic algorithm. And it could be a good investment for, you know, Ethereum Classic. Personally, I wouldn't be buying one, but if you do your research, you know, if you want to get into Ethereum Classic in the next year, 2 years, then this seems like a good way to get into it. We're going to see more ASICs join the Ethereum Classic network, I think, in the next couple of months, just because Ethereum's obviously moving to proof of stake, so people will go and gravitate towards different coins like Ethereum Classic, like FLUX, like Ravencoin, and all these other coins. The second article we have here is Summit Inside the Crypto Winter, Solana steals the lead from Ethereum. So Solana has been gradually creeping up behind Ethereum even before the crypto winter began. The network had grown in popularity amongst NFT and decentralized finance users who who had been fleeing Ethereum due to the high cost of transactions on the network. Nevertheless, Ethereum has managed to maintain its lead ahead of Solana until now, when the latter has barreled ahead. Solana transaction volume grows. One major area in which Ethereum has consistently dominated has been the volume of transactions being carried out on the network. Other DeFi and NFT projects have had to battle with the second position, but Solana has brought the fight to the fore as the crypto winter rages on. The network has seen less transactions, volumes soar higher than the record for Ethereum blockchain, making it the smart contract network with the most transactions. This comes even as transaction fees on the Ethereum network have dropped to 2-year lows. Despite this, the cost of transactions on Solana remain incredibly low compared to Ethereum, making it enticing for users. It also means that Solana is better for the carry-out small transactions, given that the user does not have to worry about paying more in gas fees than the amount that they are actually moving across the blockchain. It just shows here a price chart for Solana in the last day. Solana transaction figures came out to about 630,000 transactions for the last week, while Ethereum's had come out lesser than 500,000, meaning that Solana transactions had surpassed that of Ethereum by more than 30% for the last 7-day period. The transaction volume is the only way that Solana is giving Ethereum a run for its money. As the NFT space continually grows, Solana has been capturing a large market share. This has been made possible with the NFT marketplace, Magic Eden, which has garnered popularity due to the number of successful Solana launches, such as DeGods and OKBear's collection. This has drawn more project founders to the network. Its community is growing, especially given the lower gas fees required for minting on Solana. Even with the bear markets and decline in NFT volume, Solana NFT transactions come out ahead of Ethereum's for the previous month. The performance price-wise of the two digital assets has not been encouraging though. In the last 7 days, Solana has lost 11% of its value, while ETH has declined 7.40% in the same period. There has been some recovery in the last 24 hours, but at 2.98% and 5.15% respectively. Both Solana and ETH still have a long way to go before they reach their previous all-time highs. So we're seeing this switch from the transactions of Ethereum to Solana having the largest volume of transactions. There was less transactions on the Ethereum network due to the fact that the difficulty bomb was coming in. So that could have, affected this amount of transactions for this month, because it did start around a month ago and it's just gone up from there. But obviously the delay has come in. So I'd want to see the figures from next month and see if Solana is actually outcompeting Ethereum without the difficulty bomb in place. So far, Ethereum is still obviously the second biggest crypto. I don't know where Solana is on the list. It's probably top 5 or top 10. But I can't see Solana taking over from Ethereum in a long time. Solana still has many problems, and so does Ethereum. Solana being the fact that they have a lot of network attacks that are unusual for this large of a cryptocurrency. They had that one recently where the network went down for, I think it was around 17 hours, which is not great at all because you don't want a network going down. This is mostly because of this proof of stake consensus. Miners typically upkeep a network, so basically by moving to proof of stake, you're open to these kind of attacks that can be put in place to stop the transactions going through. Ethereum still has the miners in place, so they should be good for now, but we'll have to see in the future which one comes out on top when they both have proof of stake consensuses integrated into their system. And the last article we have is one of America's largest crypto miners sold 79% of Bitcoins on its balance sheet in June. We know from previous videos where we did around a week or 2 weeks ago that Bitcoin miners have been selling a significant amount of their crypto holdings just to make ends meet and pay off debts that they have been accumulating over the last 3 or 4 years. On Tuesday, Core Scientific, a leader high-performance blockchain data centers and software solutions, explained why it had to sell 7,202 of the bitcoins on its balance sheet. Core Scientific has operated blockchain data centers in North America since 2017, using its facilities and intellectual property portfolio for collated digital asset mining and self-mining. The company operates data centers in Georgia, Kentucky, North Carolina, North Dakota and Texas, and expects to commence operations in Oklahoma in the second half of 2022. According to a press release issued earlier today, Mike Levitt, CEO of Core Scientific, had this to say. Throughout June, we continue to add data center capacity, grow our self-mining assets, and deploy additional collated ASIC servers for our customers. Our industry is enduring tremendous stress as capital markets have weakened, interest rates are rising, and the economy deals with historic inflation. Our company has successfully endured downturns in the past, and we are confident that our ability to navigate the current market turmoil. We are working to strengthen our balance sheet and enhance liquidity to meet this challenging environment, and to continue to believe that what will be operating in excess of 30 equihash in our data centers by year end of 2022. We remain focused on executing our plan while taking advantage of distressed opportunities that may arise. We look forward to updating our shareholders in more detail during our regulatory scheduled earnings conference call planned for August 11th. It just goes on to say more in a press release, but I really want to focus on we remain focused on executing our plan while taking advantage of the distressed opportunities that may arise. So right now is probably one of the best times to buy an ASIC miner for either Bitcoin or any other coin that you're looking into. Maybe Dogecoin might be a good one as well. Because the prices are low, this is what people were doing back in 2018. When we saw those lows, they were buying up GPUs, they were buying up ASICs, ready for this crypto run that we were going to have. So they're basically liquidating a lot of their assets. Obviously they have to pay off debts, but I'm sure they're liquidating it because they want to buy more products like ASICs or GPUs maybe that they can put into their server farms, because they know in the future Bitcoin will make a run again, and anything that's on the blockchain or basically anything in the crypto space follows Bitcoin right now in price wise. So if Bitcoin goes up, all the other assets will go up as well. They know this, but they're just getting liquidity together to buy these machines and make sure that they're in place for the next bull run that's bound to happen. So that's it for the video, guys. If you guys did enjoy, please like and subscribe to the channel, and all links for articles will be in the description below.